It is going to be a busy week for CEOs and managing directors of auto companies as they line up here in the capital for the Mobility Summit, the ACMA, as well as the SIAM conference. Joining us now, an exclusive, is Mr. Pawan Goenka. Mr. Goenka, appreciate you joining us here on CNBC TV18. There's a whole host of issues to talk to you about, sir. But let me start first with what we've seen in terms of the tractor numbers, which is causing a slight bit of concern because for the month of August, we've seen tractor growth slow down to about single digits, 7% year on year versus 20% growth that we saw for the month of July. Is this a one-off on account of the floods that we saw in the northeast, in Himachal, in Kerala, which accounts for about 10 to 15% of your volume, or is there something that's changed in the market?
No, I don't think that there is a cause for worry. In fact, we had said that even in the beginning of the quarter, that this quarter, this year, the month of July, August and September would be slower than last year. And the reason is the last year, the festive season was almost a month earlier than it is this year. And tractor sales have a very high peak after Navratra, before Diwali. That's the reason July, August was going to be slow. And in fact, September will be also less than last year. And that is very much in line with what we had thought. So all of us are expecting a bumper festive season in tractor. But this quarter, which is different, cannot compare like to like from last year quarter, will be slow.
Okay, so expecting a bumper festive season.
I would admit, however, that...
Go ahead, sir.
I would admit that some of the sort of flood and all have had some temporary blip in certain areas. But as an overall industry, I don't think it's going to make a huge difference. Okay,
and you are expecting a strong festive season, but September also, you don't expect strong tractor sales to come in. Let me then ask you, sir, in terms of whether there is any possibility, any headroom, any levers that you can exercise to eke out better margins on the tractor business, which you've been able to successfully do.
Well, as I had said before, that margin growth will depend on input cost and will depend on the volume growth. The input costs are going up. The commodity prices have gone up quite significantly in the first 6 months. And they'll continue to go up in the last 3 months also. But at the same time, with the volumes going up, we do have an opportunity for spreading a fixed cost on a larger volume. And therefore, I think most of us will certainly try and maintain our margins and even try and increase a little bit, but it's very difficult to say till after the festive season is over.
Okay, you're saying that commodity costs are imposing some pressure on margins. Do you anticipate that if we see this current run rate as far as crude continuing and also the rupee depreciation, this is going to start to eat into margins?
Not much for tractors because tractors do not have a very high
overall, not just for the tractor business, but overall.
Overall, for automotive, I think there is also a balancing factor for most of us because the import cost going up because of exchange rate does get compensated somewhat with the export revenue going up again because of the exchange rate. So there is a natural hedge that most of us have against the foreign exchange. And the foreign exchange by itself should not make much of a difference in terms of overall margin because of natural hedge. Where the difference will come is if the foreign exchange artificially increases the commodity price of what we buy in India. And then, of course, it makes a difference because then it's spread over the full volume. Now, most of us have been able to pass on, till now, I would say about half of commodity price increase in the selling price. And about half is sort of balanced because of the growing volume that we have even on the automotive side. But do you, and therefore the margins have been reasonably well maintained.
But do you feel that you might be compelled to pass on more? You said that you've been able to pass on half of the commodity costs onto consumers. Do you feel that you will need to take price hikes now?
Well, this is a dynamic situation, and I don't think it's a situation of cost goes up, so price goes up. It's a situation of what the market will bear, what the competition is doing, and many other factors. And therefore, sometimes we are not able to pass on the full commodity price increase. Sometimes we may even pass on and compensate for past deficit that we may have on the commodity price increase.
Okay,
so again, it's very difficult to say exactly what will happen, but clearly we try very hard to maintain a margin and look at all avenues that we have to ensure that
no immediate price hike is what I should then anticipate?
I cannot really say that because the price hike again depends on a lot of different things. And I think the last one that we had taken was on 1st of July. Normally, we will wait about 3 months before taking another price increase. But again, this is not a very fixed schedule. It can happen a little sooner or a little later. So I cannot say no price increase, but
so you're keeping the window open for the possibility of a price increase as well. Let me then talk to you about your new launch, sir, the MPV Marazzo. If I were to ask you for the kind of run rate that you expect with the Marazzo, I'm taking a look at the Ertiga numbers, the Innova numbers, which do about 5,000, 6,500 units per month. What is the kind of expected run rate that you are working with for the Marazzo?
Well, Marazzo, first of all, the launch has gone very well. The initial reaction is very good. We are preparing overall capacity for Marazzo and S201 that will be launched in few months to be about 8,000 to 9,000 vehicles per month together. Now, whether we sell more Marazzo or more S201, we are really not focusing on that too much because we have kept our capacity flexible. So let's assume half and half or thereabout, 60-40, half and half of 8,000-9,000.
Okay, so 8,000-9,000 between the two, that's the Marazzo as well as the urban SUV that you plan to launch. But what's the strategy going to be, Mr. Goenka, as far as the Marazzo is concerned? Are you looking at pushing this more towards fleet users, personal consumption? What's the strategy for the Marazzo specifically?
No, we have tried very hard to ensure that this is not seen just as a fleet vehicle. Of course, it is a fleet vehicle also. It is designed to carry people, but we are also focusing on families, large families, to do a vehicle that is very, very comfortable, spacious, premium internal luxury, premium internals. We have tried to do that, so that's for family. We are also focusing on families enjoying outside life or sort of weekend trips and so on. So I don't think that our volume will come only from fleet operation. Fleet operation will be one of the 3 verticals that we expect the volume from.
Okay, let me talk to you about what is going on as far as the JV with Ford is concerned. So you're revisiting the past as you look into the future. What is the game plan now as far as the Ford M&M JV is concerned? Have you worked out the details? And why people ask the question again, are you interested in inking this joint venture with Ford, where the business perhaps this year has seen a decent performance, but otherwise, you know, it's seen a 1% growth in sales in India and the domestic operations in 2017. It continues to be a loss-making business. What is Ford bringing to the table for you?
Well, the Ford JV is a speculation, and I don't know where to start it
from.
So
is it happening or not happening?
What we have talked about is an alliance between Ford and Mahindra, and that alliance is very much in place. Everything that we are doing right now, we have announced it in the media. There's nothing new to talk about. We have an alliance on product development. We have an alliance on sourcing. We have an alliance on international operations where Ford might be able to help Mahindra a little more. We have an alliance for doing even helping Ford in terms of the network expansion in India. So those are kind of things that we are doing, and there is nothing further to talk about beyond that.
So there is no JV that you are inking with Ford. You're categorically ruling that out.
All the alliances that we have talked about are basically cooperation between the two companies. It is not a JV.
It is not a JV. Okay, let me then ask you about what else is being speculated or reported on, sir. And the assumption is that since Ford's global strategy is now moving towards SUVs as opposed to sedans, that you will collaborate on mid-sized and compact SUVs as well as perhaps electric vehicles. Is that the plan?
That we have announced. We have already announced that Ford is likely to use one of the Mahindra platforms that we are currently developing, and Mahindra could be using a Ford platform for electric vehicles that Ford already has, ICE engine platform that we may convert to electric vehicles. So these have been announced, and all of these are right now MOUs, meaning intentions or intent.
Okay.
We have not yet signed the final agreement to do it, and that depends on many other factors. That depends on whether the business case commercially is viable, whether there is capacity available, and all of those things. So that work is going on. So there are 5 areas that we have already announced that we are collaborating on. One is a mid-size SUV platform. One is the electric vehicle using Ford platform, one is Ford using Mahindra's engines, one is on mobility, and one is on connectivity.
So you said that this is still at the level of an MOU. When do you hope to take this to closure? When do you hope to ink this final agreement? You also said that there are several other determining factors that you're currently weighing on, especially when it comes to commercial viability. When do you hope to close this?
I think 2 of these 5 are very close to getting closed. So within the next month or so, we should be able to announce 2 of these 5.
Within a month, you'll be able to announce 2 of these?
Don't ask me which 2.
I'm going to ask you, sir. Of course, I'm going to ask you which 2.
No, so I cannot tell you that right now.
Okay, but within a month, you will announce at least 2 of these MOUs that will move towards closure with Ford. Let me ask you then, sir, about the plan as far as EVs are concerned. You're here for the Mobility Summit as well. There's confusion now on whether FAME 2 will be announced at the summit or not. But what's your own sense of what the policy is likely to take forward? We've heard from government saying that they intend to put in place a consistent, predictable and stable policy, perhaps a 5-year policy. What are you hearing? Well,
whatever I have heard is very positive. What I have heard, first of all, that it's a 5-year policy, not a 1-year or 2-year policy. That's very important because the development cycles are long and the industry needs to know that the policy will not change in the next year, 2 years. So that's very positive. But I've also heard a total outlay of 5,500 crores. These are not official information. This actually I'm reading it in the media, 5,500 crores, which is a good sum of money to put behind it. What I have also heard is significant thrust on charging infrastructure. Again, that's the need that we have of having that structure. And what I've also heard is that all vehicles, 2-wheelers, 3-wheelers, 4-wheelers and buses are being supported, which is also good news to have. So therefore, if what I have heard turns out to be the policy, I think it's very positive for ramp up of electric vehicles in India.
Okay, my conversations with the CEO of Niti Aayog, Amitabh Kant, this is what I got from him. His message to industry was that, look, we need to focus on 2-wheelers and 3-wheelers. 76% of India's mobility market is in that space. And when it comes to subsidizing 4-wheelers, it will have to be shared and connected 4-wheelers that the government will have to look at subsidizing. Given that, what would your concern be?
Well, that's my understanding also, that except for 2-wheelers, the support that is coming is primarily for commercial use of electric vehicles, and I'm quite okay with that. Of course, it's nice to have all vehicles supported, but I think if you have to prioritize and say where should the revenue or where should the taxpayers' money go, I think to support commercial application of 4-wheelers is perhaps a higher priority, and in a sense it also gives a higher payback because when you have commercial application, then you drive more every day the vehicle, and therefore the payback of how much you help in reducing pollution, how much you help in reducing oil import is certainly favoring commercial applications. So I have no qualms with that if that's how it comes out.
But what is the prognosis and the outlook, sir? There's been so much talk around electric vehicles, the transition, and now clearly it seems like the government understands the sensitivities, or at least is in no mood to sort of force the transition to electric vehicles. We're doing about, what, 1,000 electric vehicles a year. You talk about a 30% penetration by 2030. I mean, is that a realistic target?
Well, I think it's a matter of taking off, and we are still not at a point of takeoff. The takeoff requires 2 things to happen. The first is the charging infrastructure, and I'm hoping that after FAME 2 is in place, the charging infrastructure will start coming up at least in 6, 7, 8 key cities. That is number 1. Number 2 is commercial viability for the user of electric vehicles. So if we expect that electric vehicles will ramp up because people will pay for clean vehicles, that won't happen. The only way to ramp up is if it is commercially more viable for a fleet operator, for an aggregator, for a shared mobility service provider. And I think we are not very far from that. My calculation is that we perhaps need to improve the overall cost of running electric vehicle by about 5,000 rupees per month. and with a little bit more reduction in price, say about 10% coming from OEMs, with the Farmer 2 scheme continuing, with the states facilitating some of these things, with registration tax not happening, with electricity rate being somewhat preferred rate as some states are doing. I think we are just about there. So my estimate is that in a year from now, we should be at a commercial break-even, and then we should see a fast ramp-up. I think 30% by 2013 is doable, 2030 is doable, but it won't happen by itself. Everybody has to work for it, but it's doable.
Okay, you're saying you expect a commercial break even hopefully next year. But, you know, since we're talking about the demand push really coming in from the government, sir, and Tata Motors and M&M were the winners of the bid that EESL had put out. Now, it seems very clear that there seem to be issues on the procurement aspect, not so much on the delivery aspect, but on the procurement front. What are your concerns there?
Well, we have completed phase 1, which was 150 vehicles for Mahindra. And the phase 2, the letter of intent has come to us already, and we are just in the final phases of finalizing the phase 2 contract. And as soon as that happens, we are ready with about 500 vehicles per month that we can supply. And what I have been told by EESL is that they are ready with orders coming from various states. And as soon as we just do the final agreement on the commercial terms, we'll be able to start supplies.
Okay. When do you expect?
So it's a matter of weeks. It's a matter of weeks.
A matter of weeks before they start to procure under phase 2.
That is correct.
Okay. And so the total outlay under phase 2 will be how much, sir?
Well, for us, it's about 4,800 vehicles, and that's roughly about 10 lakh plus each vehicle. So you can do a quick math. I don't know what that comes to, 400 crores, something like that.
Okay, okay. Okay. Very quickly, Mr. Goenka, before I let you go, let me also ask you a quick word as far as the two-wheeler business is concerned. What is the plan, sir? I mean, that's not something that you very often speak of. It isn't, again, a business that really has moved in a direction that you would like it to. What's the plan now as far as the two-wheeler space is concerned?
Well, what we had announced about a year and a half ago as a strategy going forward for two-wheeler is what we are putting in place. Nothing has changed from that plan. We are kind of on a maintenance mode in commuter scooters and bikes that we had come out with earlier, and we are selling those in small quantities, and that will continue. But our primary thrust is on what we are calling CLPL, a separate company that we have established for bringing out Java bikes, and we expect to launch our first Java bike before the end of this year. And the other focus that we have is in PMTC, the Peugeot motorcycles,
right,
which is actually scooters. The name is confusing. And we have really revamped the investment in that company. And we have a fairly aggressive strategy to turn around that PMTC company also. So our primary thrust is on PMTC and on CLPL.
Okay. Any possibility or any plans for a tie-up with a global automaker, sir? A lot of your peers have done that, TVS with BMW, for instance. Are you looking at the possibility of tying up with a global player? Harley-Davidson is looking at lower CC engines. Could that at all be on the cards, a global tie-up?
You're showing in terms of two-wheelers?
Yes, sir.
Are you saying for two-wheel? No, we are not looking at any tie-up. We have PMTC and we have CLPL, which is a joint venture, and not a joint venture, but a company which has shareholders outside Mahindra and Mahindra. So right now we have nothing on the cards, but that never means that it can never happen.
Okay, I'll end then by asking you about...
Always keep the window open.
Always keep the window open. Are you keeping the window open for a manufacturing alliance, a joint venture, or perhaps an acquisition?
No, what I said is right now nothing is on the cards.
Okay, all right.
On any of these.
Okay.
And window is open for everything.
All right, so let me then ask you about where you see market share, sir. If I were to take a look at the market share in the UV segment, down to about 25% from 50% 4 years ago, where are you hoping to take market share? What do you anticipate as being the key levers to drive market share? And also, again, you know, just a broad sense of volume expectation over the next 5 to 10 years. Your automotive volumes at a CAGR of 11.2%, tractor volumes 11.4%. Can these growth rates be significantly surpassed in the next few years?
Well, you have a better calculation of CAGR than I do, so thank you for letting me know those numbers. So market share story, I think we have beaten to death now. And I would only be repeating what I have said many times, that given how SUV segment or UV segment has expanded, while we have kept our volume growth at a good pace, clearly with all the players coming in and clearly industry growing at 25–30% or higher, it was not possible for us to maintain a market share. We have new launches, the Marazzo launch, the S201 launch. With that, we do expect to gain volume significantly. But whether how much that will change market share, that depends on what happens in the industry. So focus, frankly, is not so much on market share. Focus is more on growing our volume, having a hit product. That's what we're expecting to do from Marazzo. As far as CAGR growth is concerned, I think 11% CAGR growth is pretty good. If we maintain 11% CAGR growth over a longest period of 8 to 10 years, I don't think we should be complaining. Well, there'll be years when we will have a dip. There'll be years when we will do better than 11%. But overall, if we average out 11%, I'll be very happy.
So you're saying focus is on volume growth and not necessarily gaining market share. Then let me ask you, sir, on the back of the launches that you have already announced and the visibility that you have with your new pipeline, what is the volume growth guidance? Because you had also said that you'd look at what you were clocking in August and September to see if you need to revise upwards your volume guidance. Do you feel confident of being able to do that?
Not right now for the industry. Not right now for the industry because, as you know, August month has been bit of a volume degrowth for the industry, about 2–2.5%. And as I said at that time, that I would wait till end of September before we take a fresh call on whether the industry growth will be higher than what we had said. There's no reason to reduce our guidance, which was about 10–11%. So there's no reason to reduce it. But right now, I'm not in a position to increase the guidance. As far as Mahindra is concerned, on the back of 2 launches that we are doing, the Marazzo now and the S201, of course, with the third one in G4 Exton. We do expect to get from these 3 products 8,000 to 9,000 volume per month. However, not all of it will be fresh volume. Some of it will be cannibalization. Okay. Not too much. So I cannot tell you the total volume increase, but from these products, we'll get 8,000 to 9,000 is what we're expecting.
Okay, 8,000 to 9,000 from the new launches. But at this point in time, you're not bringing down your volume guidance, but you're not revising it upwards either.
That is correct.
All right, Mr. Goenka, always a pleasure, sir. Appreciate you joining us here on CNBC TV18. Thanks very much for your time.
Nine to 5 job, arey 5 to 9 job, bhag daud, all the time job. The roaming wala job, the deadline wala job, or are you living in the market wala job?
Life is full of options. Choose a job and earn on your own terms. Choose to become an LIC agent. It's more than a job. It's career insurance. Be your own boss. Be an LIC agent. Ab life set hai.
हर स्माइल के पीछे एक और स्माइल होती है। जैसे आइसक्रीम के साथ पीछे खड़ी स्माइल भी हमारी हो जाती है। वो स्माइल जो काफी दूर से चल के आती है। कभी एक चेहरे से छलांग लगाकर दूसरे चेहरे पर जाती है। हर स्माइल अपनी मंजिल तक पहुंच ही जाती है। बस ऐसे ही रात दिन चलती रहती है हमारी स्माइल्स की चेन। Behind every smile, silently and reliably, Kirloskar, enriching lives.
अब सब हक से लगाएंगे ओरिएंट एलईडी, इंडिया का पहला 5-स्टार एलईडी बल्ब।
We're now joined by the chairman and CEO of Schneider Electric, Jean-Paul Tricoire. Mr. Tricoire, thanks very much for joining us here on CNBC TV18. It's good to have you on the channel. Let me start by asking you about the outlook for India. You've had several rounds of meetings with Indian government officials. Given where you see growth and demand, India today is your 4th largest market with about €1 billion in revenues. What's the outlook like for India?
Well, we take a long view on India. India has a tremendous potential for what we do, which is energy management and automation. We bring to our customers bundles of energy and digital solutions because energy is a source of life and progress, and digital is a source of efficiency. And India is offering a lot of possibilities in this domain. Industry is growing, and this is a business we, of course, we serve. The IT industry is building data centers, and Schneider is the world leader in supplying energy infrastructure to data centers. And then urbanization is really developing very fast, especially around smart cities. And this is also one of the core spots of Schneider. So we see a continuous and accelerating development of our presence in India.
Okay, speaking of the accelerated presence in India, what about capacity expansion? If I look at your numbers, today you have about 24 factories and 29 distribution centers, which act as your export hubs as well. So given the domestic demand as well as your export outlook, what kind of capacity expansion plans do you have in mind?
Well, first you have to realize that India has been the place of the most investment of Schneider in the world in the past 10 years. Our development has been fast. It has been mostly greenfield, building by ourselves factories, R&D centers. So today we keep expanding our capacity in India. 1/3 of what we do in India is exporting. We've been one of the first global companies really leveraging India as a major base for product and technology export. And we intend to keep developing our business in India by growing this presence that we have here as a strong industrial place with a global vocation, a strong R&D place, and we have already 1,500 people in R&D in India.
Okay, you've talked about the India opportunity, 1,500 people currently in India, and this has largely been organic growth, but you're now also looking at inorganic growth. What is the latest on the proposed L&T acquisition? You've tied up with Temasek for that. Have you been given the CCI approval? What is the latest on that front?
So, well, we announced at the beginning of May this year that we would be merging our Schneider India operation together with Larsen & Toubro operation, doing similar, not similar, but same families of products in the field of electrical. The project that we build together here is to build a strong Indian champion that will not only serve the Indian market on all the subjects of energy transition to a cleaner energy, but also serving the export and with a major, by the way, major project for development of export in direction of East Asia, in direction of Africa, Middle East, on the rest of the world. So this project has been announced at the beginning of May. We are in the process of going through all the necessary approvals. You mentioned the CCI. Those processes are going on. There is no news here. The teams are working hard to make sure that this beautiful project, ambitious project, is going to completion.